Dudhoria Consultancy Services Private Limited started its practice in the year 2010. Since then it has worked with several startup and new business from registration to setting them up. During this journey we have noticed that most business lack practical approach, and almost 70 to 80% of business either shut down or collapse in first 2 years of operation. Few of them make it to third year but continue to suffer the pain. We have brought this presentation to simplify this journey for startup or young business owner. Some of the points to be planned are: 1. Choosing right form of business. Sole proprietorship. The sole proprietorship is the simplest business form for operation. The sole proprietorship concern does not require registration as a separate legal entity, but it refers to the person who owns the business, the proprietor, and hence the proprietor is personally responsible for its debts. It is easiest to form, where all we need to have is to have a trade license and get applicable local registrations wherever required. Sole proprietorship is a form of business entity where a single individual handles the entire business organization. He is the sole recipient of all profits and bearer of all losses. There is no separate law that governs sole proprietorship. Partnership, a business organization in which 2 or more individuals manage and operate the business. The owners are jointly and severally liable for the debts of the business. Partnerships are easy to form. There is no minimum capital requirement. You can start your partnership with a minimum of 2 people. The profits and losses are shared among the partners as per pre-decided ratios. This form of business requires separate registration. Partnerships are basically like proprietorship, with only difference that it involves 2 or more persons. It is suitable for people who want to immediately start their business, as registration of partnership firm is very simple and comparatively a faster process to execute. You can always change the form of business to private limited company as and when you wish to. Limited liability partnership, LLP. In the recent times of growth, LLP, that is limited liability partnerships, have gained a lot of importance. Where, at one place it gives you the benefits of limited liability of a company, at the same time it also gives you the flexibility of organizing your internal structure as a partnership. The LLP can continue its existence irrespective of changes in partners. It is capable of entering into contracts and holding property in its own name. The LLP is a separate legal entity, is liable to the full extent of its assets, but liability of the partners is limited to their agreed contribution in the LLP. Further, no partner is liable on account of the independent or unauthorized actions of other partners. Thus individual partners are shielded from joint liability created by another partner's wrongful business decisions or misconduct. Mutual rights and duties of the partners within an LLP are governed by an agreement between the partners or between the partners and the LLP, as the case may be. The LLP, however, is not relieved of the liability for its other obligations as a separate entity. LLP form is a form of business model which enables professional, technical expertise and initiative to combine with financial risk-taking capacity in an innovative and efficient manner. LLP enjoys the benefits of private limited company and traditional partnerships. Therefore, because of increasing compliances in private limited company, it is recommended for startups to incorporate LLP if they are not planning to raise heavy funds in near future. One-person company, OPC, can be thought to be a refined form of proprietorship. Only one person is required to form the OPC and enjoys all the benefits of a normal limited liability company. If you are a single founder and planning to start a business, or you are already running a business as a proprietor, then OPC is actually an ideal choice for you. Also, owner can anytime convert OPC at ease. Private limited company. Private limited company is the most preferred form of business as it has perpetual succession. They are governed by Companies Act 2013. Private company is the ultimate form of business, because in this form, Owners can do any type of complex business transaction as they like. Unlike partnership, shareholders of the company are liable to the extent of their share. In India, Ministry of Corporate Affairs being the apex body in this regard, the company is to be registered with MCA. This registration gives recognition to the company and also some reliance to the probable investors. The private limited companies does not require a minimum paid up capital, that is with rupees 10,000. Also, a company can be incorporated and a minimum of 2 directors to come into existence. Irrespective of share capital or turnover, companies need to compulsorily get its accounts audited. This form is recommended for startup businesses who have passed their test phase and plan to expand their business. Though a little more compliance-oriented than the other forms mentioned above, a private limited company gives you a more authentic status in the eyes of investors and other stakeholders. Public limited company, this is the largest and the most powerful form of business in India and at the same time have larger number of compliances. This form of business is best for you if you are already running a business and want to expand it to considerable size. It is not really advisable for startups. If you are really planning something big or you have actually been running a big business, public limited company is the best option for you. Dudhoria Consultancy Services Private Limited has provided you with basic idea of different forms of business prevailing in India. There is no hard and fast rule for deciding a particular form of business. We have aimed to help you in understanding the various forms of business and their suitability situations. Choosing best form of business is as important as the execution of the idea of business. If your idea needs funding, then proprietorship and partnership cannot give the right plowback what your business needs. So, before choosing, look over all the aspects that can affect your decision of starting a business. Before going to next point, let us first understand what is Virtual CFO. Virtual CFO, or VCFO for short, stands for Virtual Chief Financial Officer. A virtual CFO is an outsourced service provider offering high-skill assistance in financial requirements of an organization, just like a chief financial officer does for large organizations. A virtual CFO may be a single person or an entity. Virtual CFO is one such specialized service provider. Startups normally do not have the monetary resources to hire a full-time CFO. Startups like to keep fixed costs low, and having outsourced service provider provides them the flexibility of choosing services as and when required. Virtual CFO provides strategic value-added services to a startup. Generally, VCFO services are typically used by small to medium businesses who generally cannot afford keeping a full-time CFO. Few misconceptions about a virtual CFO. 1. Virtual CFO can be avoided at early stage. It's a misconception that at the early stage of business, role of virtual CFO can be avoided. A good virtual CFO would always be helpful right from the point where you conceive the idea of having your own business, to say even before starting your business. 2. Small business owners cannot afford a virtual CFO. This statement is not correct. As you need oxygen to survive since your birth, so is a financial officer to business. You can control your cost and keep them associated as per your budget or deploying professionals as virtual CFO. 3. Only tax returns are filed by a virtual CFO is not correct. Small business owners can often be heard to say that they cannot afford a virtual CFO, or that they think a virtual CFO is just there to fill out forms to keep the tax man happy. But this is true only in theory. Once you hire a virtual CFO, you are free from the regular maintenance of books of accounts and statutory compliances. You can then concentrate on your business operations more effectively. 4. Business owners can himself maintain accounts and other compliances along with managing the business, is not correct. If the focus of the businessman is dissected between managing his business and maintaining accounts and regulatory compliances, it would be difficult to achieve manifold growth. If the businessman focuses on the business only and virtual CFO maintains accounts and regulatory compliances, there can be a manifold growth in the business. Benefit of choosing a right virtual CFO. 1. Saving your time. In the current scenario, it is almost impossible for business houses to get things done without the help of professionals. Often they end up in paying huge fines and penalties to government. One should spend their time in what they are good at. Your time is best spent doing what you're good at. You can probably complete most of the forms yourself, but completing them correctly would be doubtful. A virtual CFO will help in completing. Getting business licenses. Incorporating company and necessary filings. System implementations of system and control. Policies and procedures. Expense tracking. Financial planning. For you in order and on time, leaving you free to focus on earning more money. 2. Saving your money. Completing the forms correctly is one thing, doing them in the way that's going to save you the most money is another. A good virtual CFO will make sure you take advantage of day-to-day accounting and month-end accounting, payment of taxes and filing of tax returns, checking revenue leakage, contracts administration, payroll, accounts payable, accounts receivable, financial reports, control over fixed assets. A good virtual CFO will make sure that his client takes advantage of every possible tax allowance and benefit. 3. Growing your business. Having knowledge of various business and clients, virtual CFO have an edge over understanding business. A few wrong moves in the early days can put you out of business. Virtual CFO keeps your business updated with current business scenarios. Unlike traditional bookkeepers, the modern-day virtual CFO help the business in many ways, such as cash flow analysis, audit support, financial forecasting, preparation of budget, preparing MIS reports, drafting deliverables, updating the system as per the latest amendments in law and regime. In order for your business to be a success, it's important that you take the correct financial and managerial decisions early. A virtual CFO can act as a sounding board. He or she knows your business almost as well as you do and probably knows the financial side of it even better. Objective input from someone that knows your business but doesn't have the emotional attachment to it that you do is priceless. Now I am going to discuss few points on how a startup can manage the finances. Product idea and market is important for business, but it's equally important to maintain finances. Finance is lifeblood of business. There are several parameters which should be kept in mind and various factors to be looked into. 1. Spend money strategically. As the virtual CFO is maintaining the books of accounts, it would be easier to track all business income and expenses and make a budget accordingly. Once you start identifying where the money is going, you can look for better opportunities where the money could be spent. 2. Managing total debt. Debt can be managed if at the initial stage leasing is preferable than buying, as it will reduce the maintenance cost and the amount could be used for business expansion. 3. Avoid taking unnecessary loans, as late repayment of loan would add up the cost of interest charges, which would lead to increase in expenses. Loan taken for business purpose should not be used for making personal expenses. 4. Invoicing and payment terms. Once the goods or services are delivered, send the invoices to customer immediately and set the payment terms. Say for within 7 days or 15 days the payment should be made. 5. Set a follow-up process for invoices raised, and it can be done through email or SMS. As a result, debt can be reduced and funds will not be blocked for longer period. The next point we should look for is choosing a right banker. The bank is not only for depositing and taking out money or checking bank balances. The owner should select such bank that supports the business and are reliable. 1. Added convenience means the bank must have online services, ATM services. The approval of loan application takes time, but long-term relationship with bank is beneficial as they can process the application faster. 2. Privilege to have better interest rates and loan terms. Long-standing personal relationship with bank can provide loan at lower interest rate, and on bank deposits higher interest can be earned. 3. Higher level of customer service. Select the banks which provide lower insurance rates, offer cash discounts to customer, offer gift cards, hotel discounts, and many other facilities like this. 4. Fewer fees. If there is good relationship with bank and the business runs into trouble with overdraft fees, minimum deposit requirement charges at that time the banker can waive off or reduce the fees. Market analysis. It should be done before selling or providing goods or services. 1. Increase in sales. By carrying out market research, customers' needs, wants and latest trends can be identified, which can be helpful in increasing the sales by constantly improving the product or services. 2. Increasing and maintaining customer relations. To please the customer and to win the customer's heart, their comments and suggestions should always be taken. And once the customers are pleased, they will start advertising your product or services. As we say, word of mouth is always better than any advertisement. 3. Minimize risk factor. Market research helps in identifying the evidence of success. If market research does not provide confidence, risk should not be taken. 4. Business growth. Market research can help a business find new markets that can be the best place to introduce its products or services to a wider audience. In this way, a business can secure more sales and also find the new business opportunities for better growth and expansion. Since you have decided to go for registration of business, you must have done a preliminary or a detailed work on your idea, but often we come across people who come to us that they want to start a business but are not sure what to start with. Remember, you are the best person to judge your capabilities and expertise, which no one else will. I hope you liked this video. If you liked this video, then give it a thumbs up and share with your friends. Thank you for watching. Dudhoria Consultancy Services Private Limited.